Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today me and I would like to talk about some of the non-financial considerations with partnering with a business partner or buying into a business or acquiring a business. Now, we recorded an episode a couple of years ago, season 3, episode 21, where we talked about, some of the financial considerations associated with buying a business, but it's really the non-financial, I think, that tend to cause the most amount of pain and hassle. You can always navigate something that's, structured poorly and fix it later on. Of course, there's cost associated with it, so I'm not suggesting that you purposely go and make those mistakes, but I think businesses tend to fall because of non-financial matters. So Mina and I will talk about sort of 12 considerations that we've sort of highlighted that in our experience with our clients, and obviously our own personal experience as well, some of the issues that you can come up against, I guess, when having a business partner. And the first one is strategic alignment, I should say. So that's really making sure that everyone's goals and outcomes are aligned in terms of what you want to achieve in this business. And again, that can be financial and non-financial. What type of work do you want to do? How do you want the business to be regarded in 10 or 15, 20, 30 years from now? These sorts of things. What income do you need from the business to make your own personal financial situation work as well? So it's really just strategy-wise. And if everyone's kind of on the same page, then you're typically not going to, or the chances of having issues down the track are greatly reduced.
The second consideration is around reputation and brand. And it's a good thing to sort of take in public perception. And it could include things such as, your Google reviews and the like, which I admit sometimes are skewed, so you can't hold a lot of account to them. But it's good to just understand where the brand is, where the goodwill is and what you're buying into, and whether there is a good uptake in the brand itself and how it would add value to your existing brand.
Market positioning is really important as well. I mean, you've got to think about, you look at historic financials when you go into business with someone, you're buying into a business, and that's great because it tells you, what has happened in the past, but how is that business going to thrive in the future is a really good question. It's really how it's positioned in a particular market or industry. So, are they targeting the right customers? Do they have a sustainable product or service that they're offering? Does it align to your view of the world as well, which is really important?
And understanding the customer base, so the diversity of customers. Are you getting a new set of customers that you didn't really have before? And is there services or products that you can add on to them, for example? And what's the return customer like? What's the retention rates, the loyalty programs? What are the relationships? Understanding those before considering, implementing that sort of acquisition.
It's really difficult to build a great business with average people or even poor quality people. Business really is a people type of business, and that's true whether you're offering a service or a product, because at the end of the day, the people that you employ and the quality of those people, the care and effort and enthusiasm that they bring to the role can have a dramatic impact on the results that they produce. And I think in Australia and really around the rest of the world, that the focus really is on productivity with enhanced technology, AI, all these sorts of things. That's really where our focus needs to be. So in the past, maybe the focus on team members was less. Arguably, I still think it should have been strong. But I think in the next few decades, particularly with AI, the quality of the people in the business starts to become a greater concern. So what do the staff look like, in terms of quality? Looking at things like happiness, staff turnover, satisfaction, career opportunities, all these sorts of things. The ability to attract great people into that business, is that business positioned to do that? I think are all incredibly important considerations.
And I think one that often gets looked over is operational efficiency and the management systems in place. People see the business that they're acquiring or partnering with in all its glam and glory, but they don't evaluate their operational workflows, what they're good at, what they're bad at, where the bottlenecks are, where the potential scale is. So it's really good to understand, what technology and innovation that you can either add to that business or that you can actually acquire from that business, and how it can all implement together and work together.
You need to think about legal and compliance risks. So, that's things like customer contracts, legal disputes, regulatory compliance issues, all those sorts of things. Now, of course, it's going to be different for different industries, and some industries are going to have much more regulatory oversight than others. So if you're in an industry where there's not a lot of that, this is not a big consideration. But if you are in an industry where there's a lot of regulation, it's really, really important. And the things that you want to look for here is a proactive approach to compliance. So of course, we don't want to waste, in inverted commas, too much money on compliance issues, but we can't ignore it either. And a good measure is really, whether there's been any compliance activities in relation to that business. Do they get sued often? Are they having issues with, the government in terms of compliance? That can be real bad red flags.
Also consider your vendor or supplier relationships. Is there diversity within the suppliers, or are we single point sensitive? What contract terms do you have in place to secure the pricing that you currently have and the terms? Obviously, think about your creditor terms, how the cash cycle in terms of when do you actually get the cash in for your product or your service, and when do you actually have to pay your vendors. So it's really important to look into those relationships and contractual terms.
Intellectual property can be a big one. You have to ask yourself, is there a lot of intellectual property related to the business, whether that's goodwill or a particular way of doing things or a trademark, brand name, these sorts of things. You want to make sure those assets are protected. So ownership of trademarks, copyrights, patents, proprietary processes, these sorts of things, really important. If it's going to be a big factor that you're paying for to get into this business, or that you hope to enjoy the benefit of that asset, you certainly want to make sure that it's legally there, you have a right to it, and it's defendable, that it's going to be a competitive advantage that will persist into the future.
Business location and premises, the suitability of the location, whether it's in an area that's visible to customers or accessible and it attends to the local demographic or the potential market. Now, especially if you're going to be purchasing the underlying freehold, you want to establish the property condition, what kinds of work it needs to be done, any sort of zoning constraints or developmental opportunities that might either hinder or benefit the potential business.
Cultural fit is a very important consideration, arguably probably the thing that destroys most business combinations, really. Cultural fit really comes back to values, and hopefully a company or entity or institution has identified a set of values that really guides all their decision making. And values are things that can never be compromised regardless of the commercial outcome. So they're things that we must absolutely live by every single day with every single decision in every single circumstance. And there's no one in the business that's either above or below those values. And that building that culture building a culture that's aligned to a set of values will make it really clear whether then you fit into those values or not. And if you're combining two businesses, whether the staff, the clients, everyone that's involved, all the stakeholders that are involved in that business, all have to align to those business values. When it does, it thrives. But when there's misalignment, that business will never succeed, no matter really how much effort is put behind it.
Finally, the work-life balance and personal impact. End of the day, we all get into business for, flexible time commitments, enjoyable work that we actually want to do. So you need to really evaluate the realistic impact on your personal life, your workload and lifestyle expectations. What time commitment is actually required from your end, and what stress will be added as a result, and whether it's actually worth it all in the end.
So there's some of the things that we think, non-financial factors that people should think about when combining two businesses, joining a business, buying a business, doing these sorts of things. But even if you're not undertaking those sorts of activities and you're trying to build a succession plan inside your business, these are also the things that you want to be thinking about, because anyone that you hope to attract to join your business, hopefully they're thinking about these things too. And if you've got a business with a great culture, a great work-life balance, really happy staff, fantastic clients in that business, great reputation, excellent marketing position, all these sorts of things, you're not going to have too much trouble building a succession strategy. But if you're weak in many of those factors, well, then it's going to always be an uphill battle. Anyway, hopefully that's useful. And until next week, bye for now.